There's this powerful glitch in our thinking. It's a flaw in our logic that makes us see the world through a really distorted lens, one that only focuses on the winners while all the losers just disappear. This is called survivorship bias. And trust me, once you see it, you're going to start seeing it everywhere.
I bet you've heard this a million times, right? They don't make them like they used to. You're looking at a beautiful classic car from the 50s, still chugging along, or maybe an old building that's been standing for centuries. It feels true, doesn't it? Just a simple observation.
But hang on a second. Is that really true? Were things just built better back then? Or are we only looking at the lucky few that survived? I mean, what about all the cars from that era that are now just piles of rust? What about the thousands of buildings that fell apart and are long gone? We're only seeing the survivors, and folks, that's the trap.
And that gets us to the heart of survivorship bias. It's basically our brain taking a shortcut. We look at a small, successful group, and we mistake that for the entire picture because all the failures have vanished from view. And this leads us to some wildly optimistic and often pretty dangerous conclusions.
To really get a feel for how high the stakes can get with this stuff, let's go back in time. We're going to look at the most famous example of this bias in action, a life-or-death puzzle from World War II.
So picture this, it's the middle of the war. Allied bombers are flying these incredibly dangerous missions over Europe, and a terrifying number of them just aren't coming back. The military is desperate to protect their planes and their crews. Their big idea? Add more armor. But here's the catch. You can't just armor the whole plane. It'd be way too heavy to even get off the ground. So the crucial question was, where do you put it?
So they did what any good engineer would do. They collected data. Every single time a bomber managed to limp back to base, they went over it with a fine-tooth comb, marking every single bullet hole. And a really clear pattern started to show up. The wings, the tail, the main body of the plane, they were all getting shot to pieces.
Okay, so now it's your turn. You're the officer in charge. You're looking at these diagrams covered in red dots. The data seems to be yelling the answer at you. Where do you put the extra armor?
The initial plan was exactly what you'd think. It was the common sense answer. You reinforce the spots that are getting hit the most, right? You put the armor where you can see all the damage. It seemed perfectly logical, and it was totally, completely wrong.
But luckily, this problem landed on the desk of a secret group of math geniuses. And one of them, a statistician named Abraham Wald, looked at the very same data, the very same diagrams, and saw something absolutely critical that everyone else had missed. And this is where Wald's genius just shines. His conclusion was the exact opposite of what the military thought. He said, the armor doesn't go where the bullet holes are. It goes where the bullet holes aren't. He argued that they were about to reinforce the strongest parts of the plane, not the weakest. The extra armor needed to go on the engines and the cockpit, the very places that looked untouched. Let's break that down, because this is the key. The military looked at the bullet holes and saw weakness. Wald looked at the exact same holes and saw strength. He realized the bullet holes didn't show where the planes were getting hit most often. They showed where a plane could get hit and still make it home. The data they had was only from the survivors.
So why were the engines and the cockpits so clean on the planes that came back? Well, it wasn't because they weren't getting hit there. It's because any plane that did take a hit to the engine never came back. The missing bullet holes were on the missing planes. That was the invisible evidence. They armored the engines, and it's no exaggeration to say countless lives were saved because of it.
Okay, so that's a cool story from history, right? But this isn't just some old-timey puzzle. This exact same logical mistake has huge consequences today, especially when it comes to your money. Let's see how survivorship bias can fool even the savviest investors. Get this. A recent deep dive into India's small-cap stock market found that if you only look at the companies that are currently in the index, the survivors, you would have overestimated the historical returns by a staggering 23.3%. That is a massive, massive miscalculation that could lead to some really bad decisions. And this chart right here shows the illusion perfectly. That green line, that's the fantasy. That's the rosy picture you get if you only look at today's successful companies. But the red line, that's reality. That's what actually happened when you include all the companies that failed or got kicked out of the index over the years. That huge gap between them, that's pure survivorship bias at work.
So why does this happen? Well, during the period this study looked at, an incredible 82.5% of the stocks were removed from the index. But here's the surprising part.
Only about 20% of those were true failures, companies going bust. The other 80% were either demoted for getting too small or, and this is key, they graduated for becoming too successful.
And this is such a critical point to understand. Survivorship bias isn't just about ignoring the dead companies. When a super successful company gets so big that it leaves the small cap index, its amazing performance also vanishes from the data you're looking at. So your view gets skewed because you're missing both the biggest failures and some of the biggest winners.
So, we've seen it in a world war, we've seen it in the stock market. But the truth is, once you know what you're looking for, you'll start to see this bias hiding in plain sight in pretty much every aspect of our lives.
I mean, think about it. In business, we hear all about the unicorn founders who dropped out of college and made billions, but we ignore the fact that something like 90% of startups fail. In medicine, there's something called the healthy worker effect, where studies on factory workers can make them seem healthier than average, but that's because the people who are too sick to work aren't in the study. And in science, studies with positive results are way more likely to get published, which can really distort our understanding of what's actually true.
So how do we fight this? How do we stop our brains from falling into this trap? Well, first, always seek out the denominator. Don't just ask how many billionaires dropped out of college, ask how many total people dropped out and what happened to all of them. Second, go out of your way to study the failures. The lessons from things that went wrong are often so much more valuable. And most importantly, always ask Abraham Wald's question. What am I not seeing? What's the missing evidence here?
At the end of the day, the real danger of survivorship bias is that it tells us a comforting but totally incomplete story. When we only focus on the winners, the survivors, the success stories, we don't just get an overly rosy view of the world, we fundamentally misunderstand how it even works. The real story, the whole story, is always in the evidence that didn't survive to be seen.